And now it's time for our weekly market update with Catherine Murray, host of the Buck Stops Here. Take it away, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. We are seeing North American equity markets higher on the day. Let's start with the U.S. markets. As I mentioned, they're higher, but look to be on track for weekly losses, which would end 3 weeks of straight gains for U.S. markets. We're also keeping our eyes on the price of WTI, which continues to show some nice strength, which would lead to 6 weeks of gains. In terms of economic data, both here in Canada and the United States, we saw the jobs report. U.S. jobs did disappoint, a gain of 187,000 that missed expectations for 200,000. That's actually the lowest number we've seen since December of 2020. We also saw hotter wages, but the number of hours worked did decline. This actually taken together caused some pressure on the 2-year yield. So yields took this as softer data than expected. So maybe we'll see the peak of the Fed rate hikes. That's a whole nother topic. But away from that, earnings in the United States and in Canada are in full swing. Amazon is one stock to watch. It's up by about 10%, following very, very strong earnings results, both on the revenue as well as the earnings beat. And really led by strength in e-commerce as well as AWS, their web services systems. They also importantly saw advertising, which helped the quarter as well. So that's positive because we know that when we see softer economic outlooks, ad is one area that is of concern and can really weigh on companies. From a macro perspective, though, the company management was somewhat cautious. They did say that they saw a nice improvement in North America as well as the international markets, but they also commented that the consumer is trading down. Another stock to watch within big tech is Apple. That stock's trading down by about 3% right now following their results, which were somewhat in line to mixed. iPhone revenue did miss expectations. I think that was somewhat expected, but the services was very strong. A nice beat there, $21 billion. Commentary from the company management, a little bit cautious though. They did talk about a softer U.S. smartphone market and that there's risk to the upgrade cycle. So again, that perhaps is weighing on the stock, but also there could be a little bit of profit taking given the recent strength in the stock performance. Away from that, I would also just point out bookings within the travel space. It's always important to take a look at that to get a feel for the economy and the consumer. And they had very strong results. That stock also up. Away from that, important to note this week that Fitch Ratings Services did downgrade the U.S. credit from AAA to AA plus, AAA to AA plus. But they did say that they're expecting fiscal deterioration, growing debt burden, and also erosion of governance. So just something to be aware of. But the market seemed to have shrugged that off. Away from that, stepping back and looking at the market strength as of late, likely because the labor market continues to show strength. It's not imploding. We also have an earnings beat rate so far that's higher than the 5-year average. And the consumer seems to be quite strong in the United States. Taking a look at the Canadian market and the Canadian economy, as I mentioned, the TSX is up on the day, but looks to show losses of about 2% for the week. Canadian jobs came in with a loss of 6,000 versus an expected gain of 20,000. And the unemployment rate did tick higher to 5.5%. I'd also point out that manufacturing contracted for 3 months in a row. Away from that, full swing earnings results here in Canada as well. TELUS, just to point out, did cut about 6,000 jobs and earnings came in less than expected. We also had some nice strength out of Shopify's recent results. Enbridge came in higher than expected. BCE, Bell did spend about $80 million on the recent job cuts that they announced this past quarter. Magnus results came in better than expected for the second quarter. And Tourmaline also very solid second quarter results. Away from that, on the housing market front, Toronto and Vancouver sales did slow. Toronto down by about 8%, average price down by only 0.7%, so holding pretty steady. Whereas Vancouver, those sales were down 18%, but prices were higher because of the shortage of supply. So we are continuing to see the housing perhaps level off, but no significant moves necessarily on the pricing front. And lastly, just to note, the Canadian dollar certainly has been helped by the price of crude and the strength that we've seen over the past 6 weeks. Nima, I'll leave it there. Back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of the Buck Stops here for Forum Daily's weekly market update. Remember, for more in-depth market coverage, be sure to tune in to the Buck Stops here Sundays at 9 a.m. Eastern only on the News Forum Network.